Inflation for the month of June in Canada fell to 3.1% off of its high in May of 3.6%, which means that we have inflation trending down, while the IMF is predicting that global growth for the year of 2021 is going to be above 6% as countries come out of the pandemic. And we're going to talk about what all this means for you, what it means for interest rates, and basically what the numbers are telling us in today's video. But before we get into it, do me that favor, hit that subscribe button, hit that notification bell, and please hit that like button so more people like you can see this video. And don't forget about our race to 25,000 subscribers. Some of you are probably getting tired of hearing me say this, but we are gradually getting closer and closer and closer to 25,000 subscribers. So if you want to hear me stop talking about this contest, well, go ahead, share this video with some friends, hit that subscribe button. And for those of you who don't already know, the winner is going to win $5,000 to put towards their RESP, their TFSA, their RRSP, pay down their mortgage, pay down other debt, do with whatever they like with. But in order to win, you have to subscribe. So go ahead, click that subscribe button. It's free, it's easy, and it's definitely worth it. The definitive guide on how to manage your credit. Product, penalty, price, in that order. It's never been more important to get your mortgage right. Okay, so let's get into it. Let's discuss inflation for the month of June, because the numbers have come down to 3.1%, which I think is probably a big sigh of relief for the Bank of Canada, because obviously we had big inflation numbers in April and May as base level months. So in other words, the year previous, where the pandemic shutdowns had basically lowered prices on pretty much everything, as those lower months started to take effect on the inflation rates. And you know, a lot of things weren't necessarily going up significantly in price from a long-term perspective, but from a short-term perspective, yes, things got really cheap last year and things are coming back to normal prices this year. And as a result, we were seeing big inflation numbers. Obviously, the one that we talked about yesterday in our video was the lumber numbers, which went through the roof, skyrocketed due to supply chain issues and demand. And now we're seeing those prices come back to pretty much normal levels that we saw pre-pandemic. They're a little bit higher, but at least from the perspective of what prices were last year for lumber, we're starting to see things start to level out. So, and we're starting to see that happen across the economy and across different types of goods as things start to normalize. So a lot of the goods and services in the economy, we're starting to see at pretty similar levels to, or at least from a price point perspective, to what they were a year ago. And I'm going to just jump you right into the headline here using, of course, our favorite news outlet, BNN Bloomberg. Again, best reporting on the economy, in my opinion. I don't get paid by them. They don't promote, or I don't get paid to promote them. They don't give me anything free. I pay for my subscriptions, but I just find that their reporting on the economy tends to be the best out of all the Canadian news outlets. And here's the headline: inflation ticks down to 3.1%. in a big sigh of relief for the Bank of Canada, coming off those 3.6% highs in May. Now, there's a whole bunch of things that they talk about here that have gone up in price, down in price, but instead of using Bloomberg, I'm just going to jump you straight into the Statistics Canada news release, because quite honestly, the Bank of Canada hasn't even updated their CPI numbers on their website, but Stats Canada released this as of this morning, and we can go through and look at the numbers. And as you can see, here's the headline: rose 3.1% year over year on a year over year basis in June, down from 3.6% gains in May. So what this means is those transitory inflation pressures are starting to subside. And you know, they break out a whole bunch of the different items in here. They talk about the fact that, well, shelter and transportation are up 4.4% and 5.6% respectively. And that is contributing to a large amount of the inflation. A lot of other components, in fact, there was slower price growth in 4 of the other 8 components. And a lot of the components just aren't going up in price as much as they have in the last few months, because again, things are starting to level out. We saw last summer, June, July, August, people started to get at least a little bit back to normal. They started to spend a little bit more, and therefore the prices are a little bit more stable from the June, July, and August months of last year than they were for other months of the year. Gasoline prices are starting to increase at a slower rate. Shelter costs are continuing to rise. But when you start to look at things like beef versus chicken, beef isn't going up at as high as a rate as chicken. And I don't know about you guys, but in the past, beef has been largely expensive. There's obviously been some big supply chain issues in the beef world, in the poultry world. And typically what we see is beef prices tend to go up prior to chicken prices. You see this at the grocery store where you go, holy crap, how am I paying $25 for a steak that 2 or 3 years ago I was only paying $5 to $10 for? But the beef prices are going up at a slower rate. And this is good news because of all the shutdowns that we saw in the beef and the poultry and the food manufacturing industries. They are starting to get their supply back online and things are starting to normalize, which is good news for the overall economy. Prices for fresh vegetables have continued to go down. They don't really provide any commentary on why this is, but in particular, tomatoes, so if you're a tomato lover, are down 30.3%, and potatoes are down 7.7% in June, which is stemming, according to this, from increased supply and favorable weather conditions in growing regions. So that's a good news. We had the pandemic last year. This year we get blessed with really good growing conditions, and overall that means lower food costs. Consumers are paying less for cellular phone plans. This is happening as a result of more and more competition, more and more pressure from the federal government for competition to exist, sharing of networks, all of those things. So we're starting to see those prices go down 21.4% less for cellular services on a year-to-year basis in June, which I think is a really big deal because obviously cellular prices are very, very expensive. And by the way, if you've watched our credit videos, you'll know that if there's one type of organization, one type of company that will destroy your credit for absolutely no reason, it is a cellular phone company. So always make sure you pay those cellular phone bills. And even if you disagree with them, pay them and then argue to get your refund back so that they don't destroy your credit, because they can and they will. They obviously have a spotlight on supply chains here, talking about the fact that supply chains have contributed to a lot of the increase in costs, especially in transportation. We saw the inability to get semiconductors pushing up new car prices and then pushing up used car prices. So obviously supply chain issues play a major role in higher inflation. If these supply chain issues weren't there, there's a good chance that we would see inflation down around the 2% range, not pushing at 3 to 4%, which goes to that point of the fact that it isn't necessarily money that's being injected into the economy that's causing inflation. Yes, that can have inflationary pressures, but not in times like a pandemic where you see a significant reduction in growth. But what it does do is it indicates with these supply chain issues that a lot of the higher prices are due to not being able to get goods from as a result of the pandemic, not necessarily from money being injected into the economy. Because you have to remember that money is being absorbed by the lack of growth in the economy and therefore not necessarily leading to higher inflation. And then good news, if you live in Saskatchewan, you have the most reduction in price growth of all of the other provinces. So in other words, it's cheaper to live there than it is in any other province from the perspective of how much things are going up in price. So that's the Stats Canada Daily Digest and the highlights from the Consumer Price Index. One thing to note here, the Consumer Price Index has a basket of goods, and they change their baskets of goods on a fairly regular basis based on what the demand is in the economy. Some of the headlines, some of the news reports out today talk about the fact that that has been changed, which insinuates that inflation was artificially made lower as a result of those changes to the CPI basket. That is not the case. Yes, they changed the basket, but there is a specific note in the bottom of here, which goes on to talk about the fact that the CPI headline rate for June of 2021 would have been exactly the same using the 2017 basket weights. So if you're reading these headlines and you're going, hey, they changed the CPI basket to make the inflation numbers artificially low, well, that just is not what happened, because quite frankly, they have said very clearly here that the changes that they've made did not impact the actual inflation numbers. The inflation numbers are the inflation numbers. And what we're seeing is that as the transitory inflation numbers are coming out, or the baseline months are coming out of the CPI data, what we are seeing is that inflation seems to be normalizing, which means, and this is really good news for mortgage borrowers, that we could see lower interest rates for longer if inflation trends at a very low level. So if you are looking at getting into the market, if you are looking for the lowest interest rates, we've put together some information for you in our Secrets to Getting the Lowest Interest Rates course. You can find that in the link below, or in the description below. There's a link and it has a 50% off coupon for that course. So if you're worried about interest rates, if you want to figure out how to get the lowest interest rates in today's market, that course is there. We've priced it so low that you should get at least 10 to 50 times your money back. I've put a special offer in there in order to guarantee that you will get at least 10 times your money back if you choose Mortgage 360 for your mortgage. And other than that, if you found this video useful, do me that favor, hit that subscribe button, hit that notification bell, please hit that like button so more people like you can see this video. And don't forget about our race to 25,000 subscribers. If you want to hear me stop talking about it, all you have to do is subscribe. And then I guess you need to hear me talk about it for a little bit longer till we get to 25,000 subscribers. But yes, don't forget about it, because all you have to do to win is subscribe to this channel. We'll see you in the next video. Cheers.